All right, everyone. So I'm going to show you crude oil, which is looking like a really good buying opportunity now because the market sell-off when oil was getting weaker over the past few weeks was because of the banking crisis that happened in the United States. As we know, that Silicon Valley Bank collapsed and it caused the crude oil price to sink because there was fears of a banking crisis that could cause a recession, and oil prices always go down if the US economy goes into a recession. So firstly, I want to show you a spreadsheet which will really show you the historical correlation between the US economy and the price of oil. Here is the manufacturing PMI data of the United States. Manufacturing data goes back to 1948. And it's a predictor if the manufacturing sector, so any company that manufactures a good, is going through growth in their earnings or contraction in their earnings, because that is an indicator if the US economy is going to be growing or expanding. Now remember, the US economy is the world's biggest economy. If the US economy is growing, then the rest of the world is growing because dollars are going all around the world because the US is the importer of goods from all the other nations that are selling stuff around the world, and those dollars going abroad to buy those imports helps the rest of the world get richer. So when manufacturing data is below 50, this indicates that the US economy is going through contraction. So think about it. If the US economy is going through a recession, then people are going to tighten their belts and not going to spend as much money, and that means less dollars are going to go to the rest of the world, and that means the rest of the world is going to be earning less, and they're also going to feel the pinch in terms of their incomes going lower. So what do people do? They cut back on spending. When they cut back on spending, the demand for oil is immediately hit. Hence why when the blue line goes lower and shows the US manufacturing sector is going through contraction, what happens to crude oil prices highlighted in orange? Oil prices will go from $140 a barrel and they'll sink all the way down to $40 a barrel at exactly the same time as the US manufacturing sector is going through contraction. Soon as the manufacturing data starts to improve again and show the US is recovering, what happens? US consumers get more confident. They start to spend more money. They start to import more goods from the rest of the world. There's dollars going to the rest of the world. The rest of the world's earning more money, becoming more wealthier. And what happens? The oil price turns higher and starts to move at exactly the same time as the US economy recovering. So the manufacturing data is always predicting if the US economy is going through growth or contraction, and the oil price is always following that prediction because it's going to affect the rest of the world and then the demand for oil as a whole. That's why if you look at the two, look how closely correlated they are. Every time the manufacturing sector shows the US is slowing, oil prices go lower. The US starts to recover, oil prices go higher. The US goes for a contraction again, oil prices go lower. The US recovers again, oil prices go higher. Look at the correlation, it's beautiful. This is going back to 2008. We're right now looking at nearly 15 years of data that proves to you, when you look at it on a chart, whatever happens in the US is direct in the price of oil. All right, so look what's happening right now. The manufacturing sector has been slowing, but look what's happening, it's just starting to turn and get a bit positive, right? And that's a good sign that maybe the US manufacturing sector is starting to go through growth again. And that would mean that the US stock market would turn higher again from its recent sell-off. And we could go into a period of growth in the United States. But it will happen when the Federal Reserve cuts interest rates because that stimulates growth. Okay, so what's really good for oil is, we know why oil sold off, but look what's really important to read in the headlines today. Oil extends year's biggest rally as Iraqi clash curbs exports. So there's now less oil being produced. So there's still a high demand around the world for oil because there's a problem with Iraq. Okay. And then more importantly, what's happening with the banking sector? Remember the sell-off we had in the markets all over the headlines, but the banking stocks are now recovering because there's confidence that there is optimism that the global banking sector remains resilient. So the stock markets are edging higher, the bank shares are recovering. So this oil sell-off that we had was just temporary, and now we're getting a bounce higher. So this could be a perfect opportunity, which is why I've bought oil now, to catch a nice recovery back up to where it was trading before, around $86 a barrel. So we can catch a nice 800-point move in this commodity. All right. So see how we're matching fundamentals with some technicals in terms of it was in a range, and we broke out the range on a fundamental basis based on oil supply going lower, but also the fears around the banking crisis easing. So this could be a really good trade. All right. So if you didn't know about the importance of manufacturing and oil, now you do. Now it's a really important indicator for you to look at to know where oil prices are going. All right, everyone. So let's see how this plays out. Hopefully make some really good money. And if you like this video, please like, comment, subscribe on my YouTube, and I'll keep the content coming.